Hello, long time no see. It's Duna. It's been a while, but today I'm going to go through some things that I've been kind of hinting at for a while. I think now is a good time for me to make this video. I'm going to be honest. Is it a good time to make the video because it's working? Maybe, partly. But also I've had enough time with it that I think I can explain what I need to and what I can with relative comfort. So this video is going to be, I guess, in two parts. The first part will be going over an indicator which plots the relationship of the yen carry trade to risk. And the second part of the video will be how to use that indicator with assets. I use it with the NQ. I'm sure it can be applied to other assets, but I'm comfortable with it using it with the NQ, NASDAQ. And I'll be taking a general look at the NASDAQ as well. Okay, so let's look at the indicator. I will try and explain what I know about the yen carry trade, but I'm not an economist. I know what to look for and kind of what it means relative to price action, but you're not going to be getting college level explanations here from me in relation to the complex macroeconomic thingies, but I know how to use it. So that's what I'll be going over. All right. So what do we have here? Well, first let's just take a look at this chart. Okay. Clean, please, Glenn. Clean chart would be nice. I'm just going to make a folder with all of these drawings and just put them all in here. Okay, so we have a clean chart and I'm going to hide it. All right, yeah, this is fine. Okay, what do I have? I have these lines here. These are VWAPs. Okay, VWAP. Not going to explain VWAP, but that's what they are. Okay, obviously here I have like a volume profile tool. I have another one here. Okay, this is price, and we have the purple cloud is the 50 EMA cloud. This is the Trader's Reality vector candle suite indicator, and these are vector candles. Okay, the green is the big vectors up, the red is the big vectors down, the blue is the small vectors up, purple is small vectors down. I'm not going to explain that either. We don't need to know how that works in order to understand how this indicator works. Okay, so the yen. Okay. Generally, when the yen is strong, okay, it can have implications on risk. Okay. Same goes for when it's weak. Okay. Generally, when the yen is showing strength, like real strength, it can be a sign that risk will change to risk off. Okay. I'm not going to pretend that I know all of the detailed reasons. It has to do with interest rates between the dollar and the yen, the buying power of the yen, and what investors and in institutions will do with the balance between those two currencies. All right. I think that you can, if you can buy a lot of yen with your borrowed dollar, then you can use that to buy stocks. Okay, but it doesn't even matter if I'm correct in that or not. We just need to learn how to read the indicator and how to apply it to our trading. Now, the thing about looking at the yen and seeing, you know, oh, the yen is strong, I think, or the yen's breaking up, that's strength. I'm going to short the hell out of the NASDAQ. Not necessarily, sorry, I think I'm a bit loud. I'm going to turn myself down a small bit. Not necessarily the smartest thing to do, because there's other factors here, right? Which is where this indicator can come in useful, right? It can kind of tell you the overall sentiment of the market, and you compare that with your other technical analysis abilities and other markets for confluence, and it can help you make trades, which is what we're here to do. So obviously here we see the yen has had a significant push up. Okay. The truth is, if you tried to short the NASDAQ on this push up, depending on, maybe if you were scalping, you might have gotten something. It might not have been the best time. It wasn't the best time. I did one or two, and then I looked at the indicator and realized I shouldn't have been doing what I was doing. But I did end up getting a very good trade that's still currently open from the indicator and the yen's price action. Okay. A lot of people would have seen this push up here and, you know, kind of maybe flurried to short risk on assets like the S&P and the NASDAQ and all of those risk on assets, but it wouldn't have worked out. But if you shorted around here, it really worked out. Why? First, we need to look at structure. Okay. I do structure slightly differently, just the way my brain works, but it's essentially the same thing. Okay, we took liquidity here. Okay, that's important to note. Okay, we took liquidity here on the yen. This is the 8-hour chart. It's huge, right? Took liquidity. Then we pushed up, and the last wash that we had before we took liquidity that was significant was, in my eyes, this one. Okay, so when I'm taking a change of character, I take it from that wash point. Okay. You can take it from a different point. You can take it from the last whatever high you think is significant. Everyone does it their own way. It's essentially the same thing. Okay, it's essentially the same thing. But I'm going to take it from there because that's what I do. Okay, might make a video on that in the future. And I took a range profile tool from here until when it broke out with the point of control, value area high, value area low. All right. Now, I use two time frames. I use the 45-minute and the 24-minute to look at the yen's price action. Guess you can use whatever time frames you want. I like using these. I feel like they sit on the edge of midterm and short-term PA that I'm confident in. It's kind of my environmental. They're kind of my environmental time frames. So I use them across the board. All right. Let's look at what happened on the yen. Okay, first price action. Okay, we had a little mitigation of a gap, came up to make this high. We came down, took liquidity here, had a push up. Okay, and now we're retracing back into this structure. Okay, this little range. All right, good to know. Point of control is here. We're sitting around it. Okay. Now, let's look at my indicators. Okay, so. Sorry, I'm going to hide the brush tool here. I have two indicators that I use. This one down here is essentially market cipher. Okay, this one. You don't even need to care about the blue and red if you don't use it. These waves are essentially waves for essentially volume and RSI mixed together. Looking for divergences. Look, that's what we do. We look for divs. Okay. So you don't even need to actually care about this indicator much. Let me make it small for now. This is the indicator we need to look at. This indicator is called, let me get the exact name for you. It's the BFM yen carry to risk ratio. Okay. And let's read the description here. Very simple. Shows risk of yen carry trade unwinding based on cost to borrow from Japan to buy US stocks compared to interest rate in USA. Okay. This visualizes, in a sense, how lucrative or how worth it is to be, for money to be flowing into yen and out of risk, or out of risk and into, or into risk and out of yen. Okay, essentially. My settings, which I've kind of dialed in with a small bit of help from AI, but also just they were very close to this, but I altered them with a bit of help from AI and looking up what the best values these would be for my specific use case, which is kind of like it's day trading, but I also do scalping. I rarely do swings. So I use these settings. Okay, if you're someone whose environmental timeframes are like the 30-minute, 45-minute, then, or even down to like the 10, I think these will work for you. Just note that I use these on the 24 and the 45, and the accuracy, or not the accuracy, but the sensitivity of this indicator does vary depending on what time frame it's used on. Okay, so these values might not work, and I know that they're not as accurate if I go up to like the 2 hour. They're not the same. You have to kind of change them. Okay, so I would maybe just use it on the 30-minute. It's very close to the 45 and the 24. If you want to just start using this in 30-minute, I'm sure that will work. So we have a 2.3 line, and we have a 1.8 line, and then we have 0. Okay. The idea with this indicator is you want to look for the indicator diverging to price. Okay. So when price is moving up and the indicator is moving down, that essentially means that you should be looking for shorts on risk assets like NQ. Opposite, contrary, if price is moving down and the indicator is moving up, you should maybe be looking for longs on the NQ. Doesn't mean just long the NQ, but you should be looking for longs, essentially. Now, when you look at this indicator, you see, you kind of see waves. They're worth taking note of, but in my experience, it's better to take note of the source of the move more so than the shape of the wave. You're not looking really, generally you're not looking for divergences within these waves. They can help with overall idea, but I would suggest focusing on where, let's take this one, which will be my example. So what happened here? The yen came down, okay, into support, right? Into here, and then we pushed up, okay, and broke structure here, right? Okay. Where did this move start? And you can see that the indicator moved down and it crossed the 1 line very heavily, which is notable, okay? It crossed this line down, okay? Couldn't break past the 2, and it broke down past the 1 as price was moving up with conviction and, solid signs of, this is a move up. So just based on that logic, we should be looking for shorts on the NQ, right? Because look, this is down and this is up. What I do is I mark these and I mark where this shift happened. So this high here, okay, came from, you could take this whole area here, okay, came from this consolidation here, okay, up to here. Yes, granted, but the indicator also kept going down as price kept going up here, right? So I would say from here to here, which is here to here, okay? I take a tool and I just mark a little arrow there. So I go from here, because this is actually a wash. I like this little area as a structural point. So up to here, and I go CTR down. Now, I have that noted that this is where CTR came down from, okay? Now, you might ask, what happens when price moves down and CTR also moves down? Nothing. Generally, that I would consider neutral. That could mean that price is going to range. It could mean many things, most of which are not very actionable. So I'm just going to mark that as, okay, price is moving down, as in yen is moving down. This indicator is moving down. A lot of the times, the NQ will just do whatever it's doing within confines, search for some liquidity that's easy to grab or range. That's generally what I notice happens in these situations. Okay, so you can do, I mean, this is not very actionable to me, right? Down, down, meh. Now, we have to keep in mind that we are nested within this push-up. This push-up is the most important push. And actually, if I'm being serious, like this push-up is the most important push. So we can do the same for this, right? From here, or here, you know, the structural points here, okay? So here to here, all right? Yen, and actually this is where you can see that if I zoomed out, this would be smoother, but you can see that we were higher here and came lower. You don't even need to do that. You could look at this spike, or you can look at this spike, and if you really wanted, you could just put it there. But, you know, we are within this, but right now we're inside this little push-up, okay? Just to note, okay, we're nested. We're coming back onto the point that this started from, okay? Not necessarily looking at what the indicator is looking like relative to this point, but I just know the price is coming back into the area that caused a reaction in the NQ as well, and that we had this huge shift in CTR, okay? So let's look at the NQ at this time alongside this CTR indicator, okay? So this is the NQ. And I'm going to bring up just a little window here on the side that shows the yen as well. So I know that, you know, this is pretty touchy because, you know, we're down to here, which is where the start of this push up is expected or is from. I'm essentially looking here for the yen to break down and actually be convincing and showing me that it's losing strength and not just retracing, right? But I'm also looking for very noticeable shifts and divergences in the indicator. You might wonder, Glenn, why are you not looking at, you know, like this low? Sorry, where's the... Glenn, why are you not looking at the fact that this low, you know, and this low, and maybe not that low, are diverging from here to here? Well, what I'm focused on when it's something that is causal, like super causal, like this push, I'm looking for these big drops, these big crossing. I'm not necessarily focusing on the small little pushes down and pushes up and small divergences. I'm looking for these sizable shifts. Okay, and even this one, there's a chance that this would have led to a long, right? And if we look back, we can have a look. All right, I'm going to show you the one that I took, and I'm still in the short. Okay, and we'll go back to the 45. We'll keep them both on the same time frame. Okay, so here we have yen pushing up. Okay. Right? Yen pushing up, okay? But if you had shorted the NASDAQ here, not the best idea, right? You want to wait until we get the reaction. You want to look for actual weakness, okay, in the NASDAQ, all right? But we know that we had this shift, okay? We know that we had this shift, okay? So when the NASDAQ came to this point here, this consolidation, I was very, very wary. And I was essentially looking for shorts because I knew that risk favored, risk off was favored, essentially, because of this indicator. It reinforced the idea, okay? I'm not saying it's always going to be perfect, but it can really help you. And scalping, I've noticed it's very sensitive on smaller time frames or on the 24-minute. When we have these shifts like yen moving up, CTR moving down, and getting a nice solid entry for a short on the NQ, it can add a lot of real-time awareness and feeling to your trade. You could just feel like, you know, okay, I'm on the right side of this. But essentially, look, we came up, yen was consolidating here, okay? It moved down, yen moved down for sure, but nothing changed. You see the gray line? Nothing changed here. This is just kind of a nothing burger, okay? We know that we're retracing into a strong move. This was a bit of a nothing burger, all right? Yen came up again, okay? And as it came up, we got a divergence here, yen coming up, okay? It's very small, but we had a divergence between these 2 points, and CTR came down as we pushed up here. I took a short from around here, okay? And, you know, it's my normal time that I trade. I trade the UK session. It all really lined up for a very good short. And these are kind of the best trades a lot of the time, is when you look for reasons to not take the trade. You know, like some of the best trades should almost place themselves, because it goes from looking for reasons to make the trade to looking for reasons to not make the trade. I normally find that those are the best trades. So yeah, I guess that's essentially it. I'm still learning this indicator a bit as well. I've had it now for a few months. I've noticed it's really helped. And you can use this this logic with other markets, I guess. And you know, if you find that you have found causality that's actionable with other markets, then please share. You know, I haven't looked at it with gold or anything else. I've just been focusing on using it with the NQ. If you have any questions, I will try my best to answer them. We're all discovering these little things together, and I'm just kind of excited about this this indicator. So hope it helps. Okay, right, on to part 2, which is just kind of the general analysis of the NASDAQ. The NASDAQ. Oh, NASDAQ. I'm sorry now, but this is it's a bit messy. But let's just go to the 12-hour on the NASDAQ. All right. We've been doing this, man, for a while. And we pushed out. Okay. Pushed out. Taking out all these highs. This is a notable change of character. Down. It's the first real sign of weakness that we've gotten. That's very convincing in a very long time. Still in play till this high is taken and we close above it. Still in play. We had this midterm change of character. We had money flow going up the daily, but we actually don't anymore. These are heavy divs that we're experiencing right now, money flow wise, and normally. So look at the daily. I know this is a bit messy, but we're getting just mounting divergences. You know, just beautiful mounting divs all the way up here. Guys, I would not be surprised if, you know, we could come up again and distribute again, but I would not be surprised at all if if things start to make a turn. Could almost turn from here, right? Could almost do that. I just be careful. I'm not super convinced about another all-time high, if I'm going to be honest with you. Not super convinced. What do we have below us? We have stuff down here. I mean, you know, let's respect these liquidity grabs. You know, we are technically in a nested bullish structure, but the tolerances between a bullish continuation and this being liquidity for the for a push down they're very slim up here. As I said, the yen is showing confluence at this point, strong confluence that the carry trade might be actually unwinding. Doesn't mean they can't come back up, but you know, just be careful, especially when we're at these kind of extremes. So what do we have below us? I mean, I'd be looking for this, honestly, guys. I'd be looking to come down here and base out, or a very, very sharp swing fail of this low. But even then, we'll have shifted structure with causality leading, like coming from this and these divs and this money flow divs. I don't know about that stage coming back up to here. I mean, you know, obviously could happen, but I just wouldn't be betting the farm on it, you know. I have a lot of old levels that are, you know, they're waiting for something. They don't, obviously it could just keep going up, but they're there. And I have some nice little levels that I would definitely classify as strong contenders for a macro higher low. But we need to start breaking down before that happens. Now, does that mean that if we do come up that the yen indicator is complete horse crap? Well, no. Things are always changing in the markets constantly, right? And you have to realize that, you know, if something huge shifts macroeconomically, sure, they'll look for the best prices to operate at, but the best prices are going to generally be like relatively close, unless they've set up for a massive flush. Price can just keep moving up. If we start a small little uptrend, you know, price can keep going that way. But if you look at an indicator, you know, like the yen indicator, you can still get good trades because those shifts are real. You might be in an uptrend and the yen indicator could be flat, like screaming at you that there's that risk is off, you know, and that could be the little short that you get that was informed, you know, because maybe they were really selling at that time, but so many other things kept price moving up, you know. So just because it might fail doesn't mean that you can't use it when it works, right? And what I mean might fail is you might look at me and go, well, Glenn, you got into the big short here and price came all the way back up into your level and it's, you know, it didn't work. It's like, it did work and it does work frequently, but where you get out of your trades is up to you. Okay. I haven't used it that much to get out of trades, but I'm sure that when I see a signal that equates to this, using the yen carry trade, or in general price action, you know, well, I'm gonna be out of the trade by then. I'm already 60% out, but I am leaving this run. I'm leaving this short run until I'm given enough reasons to close it, you know. But if it does come back up, I mean, guys, so many other things impact the markets. Price can come back up here, you know, and make the high to come down. They can still do that. It doesn't mean that everyone wasn't selling here. It doesn't mean that institutions weren't actually selling here. If price comes up again, they'd be delighted because they could sell there again and higher, maybe. So just because something works doesn't mean that it's going to work and stay in that state forever. Just so you're aware of that. Anyway, I have to be proven that we are going to come back from that. That hasn't happened yet, honestly. Chart's looking a bit sketch, if I'm going to be completely honest with you. This is a monster. It's a monster down here. And it smells like a monster that might not stop. A lot of people will have limits and stuff down here, and I don't know, man. I really don't know. I don't know about this level. There's a volume gap there. It's kind of equal lows there. I am not huge on this, so I'm going to keep this short open. I did a little long today, you know. So that's the beautiful thing with my prop firm accounts. I took a little long. Where was it? I believe it was this guy on the 1 minute. I put my stop under here. I didn't take it to the top because I knew it was sketchy with what Asia had done. Where did I get out? Oh, I got out when the Dow took out China's high. So I think that was actually, it was around here. No, actually, it was before this big. Yeah, it was here. It was here. So I did a long as well, right? But I'm in a what I would call a swing short from here. So I'm just gonna wait and see what price action does. It does seem like it could widen itself out here a bit. Whether we come up and take the high again, or that builds enough for us to come down into this structure, we'll have to see. But yeah. Anyway, guys, that is me for now. It was just a quick update and a new indicator. So let me know what you think. And yeah, chat to you soon. Peace. Happy trading.